The liberalization of the Indian economy beginning in the mid-1980s and accelerating significantly in 1991 has positively impacted the financial security and income of the common person. This shift towards a more capitalist economic model has brought about significant changes over the years. Increased earnings and wealth have empowered individuals to make personal financial decisions that are truly tailored to their own needs and circumstances. The question stands, how far is this aimed at? In today's video, we will first examine the financial concept aligned to the subject of today's discussion. Later, we'll discuss how open banking technology influences the development of personal finance app, which are the most popular apps and how does that work. So, hi everybody. The market was valued at USD 1,167 million in 2021. It is expected to reach USD 1,912 million by 2030, growing at a compound annual growth rate of 6% during the forecast period from 2022 to 2030. During this pandemic, personal finance app downloads surged by about 90%. Apps like Mint, Prism, and Every Dollar became extremely popular, appealing to the 7.7 billion smartphone users who want to manage and invest their money on the go. With 60% of users preferring apps over desktop website, the trend is expected to grow, especially as open banking enhances security. Square's Cash app leads in popularity, offering features like a reward system that fosters customer loyalty. Now, this above scenario is aligned to three financial concepts, but the question is, what are those and how are they relevant? Let's figure it out one after the other. Number one is disintermediation. Disintermediation refers to the reduction in the use of intermediaries between producers and consumers, such as by investing directly in securities rather than through a bank. Personal Finance app allows users to manage their investment and finances directly, reducing the need for traditional financial advisors or intermediaries. This direct interaction enhances transparency and control for the user. Number two is behavioral finance. Behavioral finance studies how psychological influences and biases affect the financial behavior of investors and financial practitioners. It combines behavioral and cognitive psychological theory with conventional economics and finance. The shift to mobile finance app reflects behavioral changes in how people prefer to manage their finances. The convenience and accessibility of mobile apps cater to the modern consumer's desire for immediate control and simplicity in financial management. Number three is network effect. Network effect occurs when value of a product or a service increases as more people use it. For financial apps, this can mean improved features, more robust security, and better integration with other financial services as user number grows. The rapid adoption of finance app is partly due to network effect. As more users join these platforms, the app can offer better services and more comprehensive data, which in turn attracts even more users. Some of the top industry players in personal finance software market are Books4, Doxo, Money Dashboard, Microsoft Corporation, MoneySpire, Personal Capital Corporation, Pocketsmith Limited, The Infinite Kind, You Need a Budget LLC, etc. North America has held a dominant position in the personal finance software market with the largest market share. Ahead, a question based on technology and innovation would be, how is open banking technology influencing the development of personal finance app? Open banking technology is profoundly shaping the development of personal finance app by revolutionizing how financial data is accessed, shared, and utilized. Through open banking initiatives, financial institutions are increasingly providing third-party developers with secure access to their customers' financial data via APIs, that is, application programming interfaces, enabling the creation of innovative and interconnected financial services. This evolution has several practical implications. Number one is enhanced financial aggregation. Open banking facilitates the aggregation of financial data from multiple accounts held across various institutions into a single interface within the personal finance app. For instance, apps like Mint and YNAB, that is You Need a Budget, leverage open banking APIs to seamlessly integrate data from users' bank account, credit cards, loan and investment, providing a comprehensive overview of their financial health. Number 2 is streamlined account management. Personal finance app leverage open banking APIs to enable users to initiate transactions, make payment and manage their account directly from the app. For example, apps like Relovert or Monzo allow users to transfer funds between accounts, set up recurring payments and track expenses in real time, all with the app's interface. Number 3 is tailored financial insight. By accessing real-time transactional data through open banking APIs, Personal Finance app can offer personalized financial insights and recommendations to users. For instance, apps like Money Dashboard analyzes user spending patterns and financial behavior to provide tailored advice on budgeting, saving goals, and investment opportunities. Number 4 is integration with third-party services. Open banking enables personal finance apps to seamlessly integrate with a wide range of third-party financial services such as investment platforms, insurance providers, and lending institutions. For example, apps like Wealthfront and Betterment leverage open banking APIs to offer automated investment management services, while apps like Policy Genius integrate with insurers to facilitate the purchase of insurance policies directly through the app. And number 5 is data security and consent management. Open banking frameworks prioritize data security and user consent, ensuring that financial data is accessed and shared securely with the explicit permission of the user. Personal finance apps implement robust security measures such as encryption and multi-factor authentication to safeguard users' sensitive financial information. In conclusion, personal finance mobile apps have become the talk of the town due to their ability to revolutionize how individuals manage their finances, offering convenience, accessibility, innovation, security, and financial inclusion. Personal finance apps are not only gaining traction among tech-savvy individuals but also attracting mainstream attention as viable alternatives to traditional methods of financial management. With the continuous evolution of technology and the increasing demand for digital financial solutions, the prominence of personal finance app is likely to continue growing, solidifying their status as a central aspect of modern financial life.
Hope you liked the video. Let's unlock together your full potential and achieve remarkable success in the world of business. If you are new to the channel, do like, share and subscribe for more such content related to business and finance. Till then, goodbye everyone.